Hello, good afternoon. You're watching Closing Trades in ET now. I'm Anisha Jain. With me is Aisha Faridi. And for now, we're at the highest point of the trading session. In fact, fresh record high for the indices. We're above the mark of 25,900 and less than 70 points away from that 26,000 pin code, which seems to be the next destination or rather next checkpoint for the Nifty at the moment. India VIX has taken a bit of a spike today, 8% higher the last time I checked, ahead of the monthly expiry, which is later in the week. So we have seen the India VIX tread towards that 14-15 mark. PSU banks have rebounded very sharply today. So whether it's an SBI, a Bank of Baroda, a Bank of Maharashtra, all of those stocks are higher. And what's on the back foot is that heavyweight private sector bank, which is ICICI Bank. So that stock was down 2% after the solid rally that we saw yesterday, and maybe a couple of others like IndusInd Bank, etc., are also on the back foot. Real estate continues a good spike. Take a look at Godrej Properties. That stock is up a solid 6% right now. We told you back on Friday that there is a possibility of some sort of discounting happening in Maharashtra region that might have given an extra fillip. But not just that, even Sobha, DLF, DLF for instance is stronger in the northern part of the country. Sobha is stronger in the southern part. But all throughout, we have seen that some of these real estate companies are perking up. What is a bit under the weather today is pharma. So Concord Biotech is down. Rest Life Sciences, Max Holidays. So some of these names are coming under pressure, but from the frontline index, it's clearly PSUs which is doing quite okay. So an ONGC is something one should watch out for. SBI we talked about, and then autos too, Aisha. Take a look at Bajaj Auto, very close to that 3.5 lakh crore market cap now. And M&M, after that 6% rally on Friday, again it's up 3% today.
Oh yeah, absolutely. The management takeaways have been absorbed pretty well. You had a couple of brokerage notes as well coming in this morning. So a nice follow through. It's back above the 3,000 mark after many months of consolidation and a sideways move on M&M, that is. Other than that, of course, it's really banks which are at the focal point. SBI has been a bit of an underperformer, and now it makes a comeback of about almost 3%. I can see Kotak, HDFC Bank, all scaling higher by roughly about 2%. So really, banks are charging ahead. There's, of course, Godrej Properties, a 6.5% there, no less. That stock is well going very, very strong. You've got a Glenmark, ABFRL, Idea, Indus Tower. The beaten down telcos definitely are making a comeback as well. Deepak Shenoy, Naresh Mirani, as well as Kunal Bothra then on the show to talk about how the trade is going to pan out from here. Kunal, hi, afternoon. Let me first come to you on a chart check because, once again, you're seeing a quiet move across the globe, but, we're charting a different course.
Yeah, we're charting a different course altogether, but I think it's about the strength from our market internals because over the last 1 week we've gone through a very strong sectoral churn for our markets where we've seen the shift coming from the performing erstwhile sectors like IT, pharma, FMCG to now decisively the banks and more importantly within the banks more heavyweight towards the private sector banking names. And we're seeing a very strong round of a breakout from many of the private sector banking names. Now add to the fact there are other two sectors which are also making a comeback of sorts, and that's the auto pack, which over the last 1.5 odd month was going through a corrective phase. So the auto index, many of the auto stocks are looking quite charged up, as well as the metal and the commodity index, which have also started to perk up, as well as many of the stocks getting to a breakout. So I think it's a wave of long built up for a few sectors, short covering for the others, stocks which are actually keeping the markets a lot more buoyant. I think we're now in touching distance of breaking that 26,000 mark. I think that breakout should happen potentially just closer to the expiry day for the index.
Okay, that's that on the Nifty. Deepak, hi, afternoon. Good to have you on the show. Finally, a comeback by banks, although one is still a little circumspect that is it one of those flatter to deceive kind of moves that we've seen pretty much all through this year?
Yeah, yes, Aisha. In fact, I think they were the last, I don't know, man or woman standing at that point in the pack that's everywhere. Everything is moved up. But to be fair, the banking sector has had its challenges with respect to the RBI trying to curtail a lot of growth from the unsecured loans front, the RBI changing certain definitions of what banks could do, and the big merger of HDFC and HDFC Bank has kind of thrown a lot of slowdown surprises, at least for that bank itself. And margin compression overall because deposit growth is not meaningfully high, and some banks are feeling some pressure because the wholesale deposits are concentrated in a few banks. Now, what's happening now is because of interest rate cuts, you're actually getting a much better handle on
So sorry for this interruption, but the Vodafone Idea con call is currently on, and you may also want to listen
Cash
in.
balance of about rupees 180 billion as of June 30, 2024, and we are sufficiently funded to execute the capex plans in the interim. On the AGR matter, the Honorable Supreme Court has dismissed the curative petition filed by telecom companies. The curative petition was raised on very limited aspects of the AGR issue, that is, to correct the errors in demands and waiver of penalty and interest thereon. In the Honorable Court's opinion, the petition did not meet the criteria laid down for admitting the curative petitions. Basis this, they did not accept the petition, and therefore there was no discussion on the merits of the case. While a positive outcome would have no doubt eased the overall liability and enabled faster deleveraging, we would like to reassure you that our long-term business plan and revival strategy remains unaffected. In fact, our long-term business plan, which has been shared with the banks and on the basis of which the techno-economic evaluation has been done, has been constructed without considering any potential benefit in the AGR matter. Hence, while the outcome of the curative petition is disappointing, it does not have any impact on the long-term business plan of the company and its existing liabilities. Also, I would like to clarify that the curative petition outcome does not create any impact or modification on cash flows as already considered in our business plan. Most significantly, the government's commitment to support the three private player market remains unwavering. With 23% shareholding and receivables of over rupees 2,000 billion from the company, government is the single largest stakeholder in the company. In light of the curative petition dismissal, we have initiated a fresh dialogue with the government on likely remedies. To conclude, it has been a very eventful few months for us here at Vodafone Idea. Between March to July, the company has raised rupees 240 billion of equity, including preferential equity raise of rupees 24.6 billion from Nokia and Ericsson. In June 2024 spectrum auction, we acquired 50 megahertz of spectrum across low band and mid band in spectrum in 11 circles. The additional 900 megahertz spectrum acquired in 7 circles allowed us to dedicate adequate 900 megahertz band spectrum for 4G, thereby enhancing the experience of our 4G customers.
Okay, so that's the word coming in from the Vodafone Idea management. Yes, disappointing indeed that the AGR matter did not go their way, but as per them, it's not going to impact any cash flow situation, as well as the fact that they had reached out to the lenders without adjusting for any AGR relaxation. So that does not change as well for them. They are saying that the long-term business plan remains intact, and this new capex that they have done is something which is going to be funded by internal accruals plus the debt that they have laid out and planned very well. In any case, Deepak, you also talked about unwavering commitment coming in from the government to keep it a three-player market. Do you think that is the case which is going to be despite the negative outcome of the AGR case?
So, I mean, it's complex because, of course, they want three players in the race. They don't want it anything to be a duopoly. But I don't think it's two healthy players and one unhealthy player in the account of a negative 100,000 crore balance sheet kind of a player. Banks in general don't lend to negative balance sheet companies. If your reserves are negative 100,000 crores and you weren't actually one of the largest business families, they would not actually be giving, no bank would be giving you a loan. So at this point, the deeply negative reserves and the balance sheet itself is so worrying that at some point there has to be an explanation of how this cash flow is ever going to come about. Are they going to borrow from banks and pay the government? I don't think that is meaningful because that does not help the company even one little bit to do that. And there is more than 180,000 crores in the next 5 years that has to be paid to the government. I don't think this is an easy task, given that till now all their efforts have only been able to raise about 24,000 crores in equity. The numbers are just staggering. So I don't believe here that while the government may want a three-player market, it may not be three players with the exact same management that you have today. You could go for the situations where the debt has been too much. We've always had bankruptcies and a bankruptcy act to allow a company to allow its creditors to take a haircut and then pass transition the company onto new management, which can therefore operate at a lower cost. It may still have three players, but just may not be the same names.
The question is, Deepak, is that adequately priced at 11 bucks a piece? Would you buy afresh?
If there is actually a bankruptcy, the price should be zero. Then, of course, there's no. If there is a bankruptcy, but I don't think there is one right now because nobody is taking this company to bankruptcy court at all. There is no reason for them to go for right now because they have a year to get to the point where they have to pay these dues, right? And they could still convince the government to convert that 29,000 crores, which is payable in October of next year, into equity. Of course, the government will become a significant owner of the company, but I don't think they have too much of a choice. The minute the government crosses 50%, it becomes a PSU, and therefore, all the hiring and all the salary and all that stuff will, kind of have to readjust to the PSU levels, unless they get like an exception, especially for it. But I think that would not be, useful either for the government or for this company. But short of that, I don't see any other way that the company can make the cash flows to pay these massive bills. They've run out of court options to go after to get some kind of relief. So I mean, I don't think it'll happen right now in terms of a bankruptcy, but I just see this as, how are they going to get this? It's just in front of you as a wall.
Indeed, a lot of question marks there. But Naresh, we've been talking about the charts of some of these telcos as well, right? Vodafone, Indus Towers and Bharti, which is sitting at a life high. Sure enough, stick with Bharti.
So Bharti already has made a lot of a run. So for now, it is at a point where eventually you want to look at booking profit. So continue to hold on, keep a trailing stop loss and ride. The trend still remains positive. Indus Towers is the contrarian bid, which one can look at. So every time there has been a problem in Vodafone Idea, we get a correction in Indus Towers, and that has been an opportunity over the last 2 years to buy. So closer to 360, 380 is a good zone wherein the stock could be a buying opportunity.
Kunal, what's happening to Amber Enterprises and Finolex Cables?
I think we're seeing many of the mid-cap names going through a very sharp price volume appreciation. Amber Enterprises also, I think, has given a breakout. 4,600 is the previous breakout zone or a swing resistance for the stock. It's broken past about those levels by a margin of 8 to 10% further. So I think it's now crossed 45,000 plus levels on an intraday basis. Again, volumes being on the higher side indicates that this could be a start of a fresh trending move for the stock. The previous consolidation was almost 250 to 400 points for the stock, which means we could be looking at 5,200 to 5,400 as a potential target range for the stock. For Finolex Cables also, I think the stock is going through a revival. Again, a price volume breakout, the stock breaking past about the last 1 month of resistance. And there was a corrective wave which was going on for Finolex Cables since the last 2-3 months. From the June highs of 1650, the stock had fallen down to almost 1350, 1380 mark. So it looks like that the stock is restarting the process of post its correction and should be able to surpass the levels of 1658 again.
Right, okay, let's take a very quick break. Glenmark Pharma, of course, that's the big buzzer today. Given that the US FDA has issued the Form 483 with 0 observations, that and many other charts we'll analyze after this very short break. Back with closing trades right here on ET now. Still holding through, actually, no, I stand corrected. It's cooled off completely for Vodafone Idea. One would have thought that it started off okay and built on to that. But post the con call, you are seeing much of those gains actually fizzled out. Though still in the green, still got a long way to make up for last week's losses. For the Nifty, though, that's not the case. It's pretty much at the day's highs right now. A big spike coming in the last few odd minutes or so, 0.5% higher. Charting our course now to 26K. M&M, SBI, ONGC, Bajaj Auto, they're the ones which are charging ahead, along with, of course, an HDFC Life, BPCL, Hero MotoCorp, Bharti, HDFC Bank. That's also, duly supporting the market right now. But Deepak, just wanted to get your sense in on pharmaceuticals. I mean, the rally did begin about a quarter or two back, and we've often spoken about this as well. But would you go selective within pharma, or are you convinced about the move and would sort of broaden your exposure?
To be fair, Aisha, we missed this move. The move has been fantastic. Overall, we kind of didn't recognize it. I think it's been there in both the large caps and the mid caps. The small caps don't really. I mean, we don't have enough enough in that sector for in small cap pharma for us to bother. But we've seen that in general, pharma has done well. There are companies, of course, that look cheap like Natco, but there's a situation where some of their their few fortunes will last maybe 1.5 to 2 years, and then they get like 2 or 3 years of a hiatus before the next thing starts. So perhaps that's the only reason why it's cheap, and everything else, including the Sun and the larger players, they seem to have run up quite a bit. So I think there are two things happening now. There's a FDA surge of attention in terms of after COVID, they haven't done that much, but now they're actually coming and doing a lot more of those inspections. So we're going to see a lot of results. I mean, a lot of announcements that come in. So based on that, you do have a risk because something like granules can happen. And by the way, we own some of that as well. But there is, there are some companies where they've come out with flying colors or without any observations, which I think is where perhaps the future is, because once you've gone through this risk, I think the pharma sector should do continuously well going forward. The general idea over here is in overall, whether it's healthcare or pharma, there is going to be a greater demand from the West. They are growing older. Their interest rates are coming down, so the investments in the space will start moving even more further. And I think Indian companies will benefit as more and plus whether it's generics or API or even formulations. I think Indian companies stand to benefit. We probably missed the rally, but may not be still a bad time to get in if you're looking at a 5 to 10 year horizon.
So that's a view on pharma. But what are you doing with granules, incidentally?
We've held it. It's actually it's in a momentum portfolio, so it's more driven by an algorithm that will tell us when to get out. So we're not looking at it from that fundamental aspect, but I mean, of course, the news has come in, and that's what's driven the prices around. So if you ask me, if just from the algorithmic perspective, it might go out in the next rebalance, but then we allow every stock a certain amount of time before it kind of fails the algorithm and then has to move out. So this is not a fundamental based pick for us. In fact, within that space, I'd probably not pick granules as my top pick, but I would have looked at more large cap pharma. But yeah, that is more a momentum driven play than it is anything else.
Fair enough. So that was a momentum-driven trade that popped up. But what's the view on M&M, Deepak? And I think apart from IT, autos is that most debated sector at the moment, because on one end there is that high inventory and higher discounts and plateauing of demand. But on the other hand, there is this expectation that perhaps rural economy will pick up or there will be that continued momentum. Very, very divergent at the moment. Which end of the debate are you sitting on, especially when it comes to four-wheelers?
So M&M specifically, we're actually quite long. So we've been long for a while, but there's multiple reasons for it, because M&M is not just an auto company; it's also a holding company for Tech Mahindra, for all the other companies, the defense outlays that they have, and a bunch of other things as well. So I think that way it's a multifunctional play for us. But the auto space specifically surprises us because of the attention it's getting in the stock price. It's not yet demonstrated anything meaningful in the stock price. Even in numbers, this quarter should have been good, but it's okay. It's not that great that would cause such a spike in stock prices. They've crossed 3,000 today. Very meaningful return for the year. So not complaining because we own it, but I think one should not look at it primarily from the lens of just auto. I think more things are there internally that give it other levers of attention. However, the numbers in September might surprise us, hopefully, because the numbers in July and August have not meaningfully been better. But it's across the board. All auto companies are doing well. Even two-wheelers are, and even though their numbers are also not that great. So I don't. Sometimes you can't explain markets and you just accept them as they are. So maybe that's what it is right now. Just riding it and hoping for good news coming in the future.
Sense, that's the take coming in on M&M. But Kunal, since you've been tracking Tata Motors for a while now, what do you read on the charts? Because along with M&M, that also got into a little bit of a consolidation.
Yeah, and the consolidation is getting a bit steeper for the stock because the stock which made a high closer to 1175 end of July, start of August. From there, I remember I think there was a news flow on the Tata Motors DVR conversion for that perked up the stock by a margin of 150 odd points. You saw the stock moving from 1025 to 1175 plus mark. But post that, we've seen the stock correcting itself and then cooling off from that 1025 starting point for the rally. But now I believe that the stock is retesting its 200-day moving average. So what we are seeing on the charts is a definite sign of underperformance for Tata Motors with respect to its four-wheeler peers, the likes of M&M, etc. On the other hand, the stock is holding on to its 200-day moving average. But there is hardly any major price movement into the stock in the last 3-4 days, which means that there is more of a balancing out which is playing out within the sector from the auto pack, like moving up from Tata Motors and then shifting on to the other sector, other stocks within the sector. I believe that it could probably mean that maybe there could be one more the leg of correction, a final leg of correction which could happen for Tata Motors. That could take the stock back towards say 920, 925. That would be a very good level to go for a contra buy.
Coming back to you, Deepak, and interesting that you said you have to accept sometime what's happening in the market. And I found myself saying that yesterday when we were all trying to book those tickets for Coldplay concert. Did you try your luck as well?
I'm not that. I mean, I by the time I got to know, everybody was showing 500,000 and odd for the Coldplay. There's a show in Abu Dhabi a few days earlier. It's probably cheaper to go there and get a ticket because by the time you get a ticket now, it's going to cost in the lakhs perhaps. So it probably is cheaper to just fly to Abu Dhabi a few days earlier than the Mumbai one, and then get tickets for the show there. It's cheaper. It's been cheaper everywhere, even in Australia, than anything that's available in India. So I'm cheaper. I'm talking about the effective market because people are pricing tickets at now 90,000 plus per ticket. And I'm not that much of a fan of Coldplay to say I'll pay so much. For bands like Metallica, I might still do it, but that just shows my age more than anything else.
Well, okay. But yeah, there are many options. Abu Dhabi, there's Seoul as well. And I think there's Dubai right after India, if I'm not mistaken. But it's like, someone was joking the other day saying that a friend with 10 Coldplay tickets for the India concert is now filing for an IPO.
SME IPO definitely with the kind of, kind of numbers that we have seen of late.
Yeah, but that's not it. Lots to really cheer about and celebrate. And Kiran Rao's directorial Lapata Ladies is India's official entry for Oscars 2025. The film, co-produced by Amir Khan along with Kiran Rao, garnered very positive reviews upon its release from audiences and critics. And the primary aim of Lapata Ladies was not only to entertain but also to promote a social change. Through the tale of two rural brides, Rao managed to bring forth a conversation about women empowerment, gender equality and the struggles that women in rural India face daily. The rural backdrop, complemented by nuanced performances and very strong direction, resonated well with both critics and audiences. Quick break on that note when we...
Welcome back. Well, another round of tariff hike in the next 15 months. That's the word coming in from Vodafone Idea management, that internally they are targeting the fact that in the next 15 months there could be another price hike around the corner, even though they believe there is no further recourse available as far as the courts are concerned, because there is no other remedy available. This was the final outcome from the court, but perhaps they are expecting some sort of easing coming in from the government, given the kind of stakeholder management that they have done with the government. They are expecting, and they are saying that one of the possibilities could be conversion of dues into equity. That is an option which is open. We don't know whether it will happen or not, but definitely something which could be done. That's the latest coming in from Vodafone Idea call. Having said that, the stock is almost at the lowest point of the trading session. The tariff high commentary not having an impact at the moment. What is having an impact at the moment is the ratings upgrade that SBFC Finance got, because that stock is locked in upper circuit right now, 20% higher. VIP Industries is doing fairly well. Bank of Maharashtra, Dani Gas, as well as Godrej Properties, some of these names definitely in focus. And it does look like that PSUs, because on Friday we had seen the likes of shipping companies and shipyard companies do well, and today it's a case of PSU banks. Mayuresh also joins us on the show right now. Mayuresh, is it time to relook at PSUs or too early, or what's the case? How should one look at the entire PSU pack at the moment?
Afternoon, Anisha. No, I think when you're talking about the PSU pack, I think there are a whole host of sectors that get covered. So within the sectors, obviously, how upstream companies will perform will depend on crude pricing primarily. Downstream companies, again, dependent a large portion in terms of how GRM margins will get spread out. What probably happens in terms of crude pricing as well, and the transmission volumes thereof in lieu of expected demand. When you're talking about the defense enterprises, I think a lot of them have corrected from the recent highs in the last 2 months. But there are obviously a lot of tailwinds for the entire PSU defense to PSU power pack in terms of government initiatives, in terms of the capex spends that the government is expected to do in both these sectors incrementally as well. And therefore, I think expectations of strong order books expected to continue building on. Execution has been pretty stable so far. The orders are coming with pretty decent margins as well. And therefore, the only risk that probably happens for these two sectors will be the execution risk, if any, which might pull down estimated annualized earnings and therefore derate the forward multiples, if any, in that scenario. PSU banks, again, selectively, the whole scenario impact that you're probably talking about in terms of deposit mobilization and the issues that the industry is facing thereof. Obviously, I think that's going to create some elements of upheavals in terms of the overall advances deposit ratio as far as the system is concerned. But this should get normalized at some point of time. Obviously, I think the entire exercise over the past few quarters where GNPs, net NPs have come down quite significantly. A few of the banks also have decent capital adequacy, specifically tier 1 ratios at this juncture. And though I think CASA might be a little bit subdued, at least over the next couple of quarters, normalization will happen as we go ahead. Obviously, with rate cuts around the corner in the Indian context as well, there is some element of sanity that can get built up, even if they have to probably adjust a little bit in terms of their advanced deposit ratios as well. So to that extent, I think PSU banks, from a valuation perspective, also look attractively placed. We continue holding stocks like a Bank of Maharashtra and a State Bank in a global performance.
Okay, that's that on banks right now. But just taking cues from CLSA's latest note on urban consumption. In fact, if we have Jinay perhaps with us to walk us through what that note entails, but it's really picking up on the trend of the kind of high demand that one has been seeing for some of the concerts of late. 3 Coldplay shows, they sold out pretty quickly, each of them with over 50,000 tickets and an average price of $75. Diljit Dosanjh as well, all sold out, 2.5 lakh tickets, average price $90, and concerts for Dua Lipa as well as Bryan Adams as well are fully booked out. So kind of giving you a sense of the kind of urban consumption trends, while there were question marks being raised about the K-shaped recovery since COVID and whether the premiumization trend is going to stay or not, and whether urban India is going to continue to shell out for their whims and fancies. Clearly seems to be the case that they will. But Mayuresh, on the cusp of the festive season as well, which sector do you think is going to come back strongest?
So Aisha, again, I think afternoon to you as well. I think apparel makers will continue to hog the limelight. And obviously, I think you're seeing some element of respite happening in terms of input costs for apparel makers as well. So I think with the wedding season also expected to be in a full-blown proportion along with the festivities that are coming through in the next few weeks and months. But apparel makers is something that might be something to watch out for. So you've already seen humongous moves in a stock like Trend. Aditya Birla Fashion, we're probably looking at Raymond Lifestyle, which is expected to do well, as well as expectations of stocks like Manyavar as well. Obviously, I think the gold and jewelry stocks also have done reasonably well. But again, I think from a discretionary spending perspective, these QSR players should come back strongly as well. Second half always is relatively better for these QSR spaces. A lot of management commentaries are hinting to the entire perspective of having a very asset-light model as they are branching out in tier 2, tier 3 cities as well. And therefore, the expectations in terms of expansion of operations in an asset-light mode, expectations of volumes coming back in a steady fashion, input costs remaining far more stable at this juncture, and far more solid SSG growth or volume growth expected. These QSR players can also probably have the same. So I think apparel makers, QB jewelry counter, and QSR, I think these are good spaces of consumption trends.
So those are the spaces to watch out for. As far as the market is concerned, we are past the level of 25,950 in the last few minutes. There's a further traction which is building up, and we're getting closer to that 26,000 mark on the Nifty. One of the top gainers and contributors today is Bharti Airtel. That one is up 2.5%. It's contributing 25 points to the Nifty up move. And I think the last tick perhaps, emerges from the fact that Vodafone Idea says that they are expecting another round of price hike within the next 15 months. In fact, there were a lot of key takeaways. Let me take it across to Somit to run us through all of that. Hi, Somit.
Well, firstly, on the mega capex plan that the company has announced, they are saying that this capex plan will improve the company's cash flow and will also help the company gain more subscribers going forward. And most of these cash flows will be used by the company to repay the debt that they are owing to the government. Now, they are also saying that they are in advanced stages with lenders to get a loan of nearly 35,000 crore rupees, and they are expecting this advanced discussion to close in the next 7 to 8 weeks. When it comes to the AGR decision, they are saying that though the AGR decision is negative, it does not impact their long-term planning and strategy. In fact, the strategy that they had submitted, or the business plan that they had submitted to banks for this debt raising, it did not consider any AGR relief. So they are quite bullish that they will be able to raise these funds from the banks. Apart from that, they're also saying that they have made it pretty much clear that they cannot make any more appeal with the courts regarding this AGR petition, and now they only have to work with the government for any remedy, and they are already in talks with the government, and they are expecting some positive outcome to come in, given the engagement with the government has been pretty much on the positive side. They are also saying that tariff hike is pretty much needed even going forward to improve the financial health, and internally they are estimating another tariff hike to come in the next 15 months. And on the dues that are now coming up for payment, they are saying that from FY27 they have to pay nearly 43,000 crore rupees of dues annually, of which nearly 17,000 crore rupees is related to AGR dues, but there is still an option to convert this dues into equity. So if they opt this option, there could be much more equity dilution coming in for the existing shareholders.
Right, we leave it at that. That's Vodafone Idea currently in trade, less than 4% of a gain as opposed to what it actually started off the day with, or pretty much held through up until mid-session. In the meantime, just refreshing the screen, while the Nifty, of course, is going good, M&M, ONGC, SBI is still powering up ahead. Banks clearly in the 4, Reliance up about 0.6%. Let's address some of the losers as well, because while L&T, ICICI Bank are a lot more sedate, sectorally, it's actually technology. So TCS, HCLT, Infi, Wipro, LTIM, they're all the ones which are languishing. Kunal, just an aberration, or do you see a churn happen here and IT take a backseat?
Yeah, IT should take a backseat, I think, and it's a good sign that the index is going through a very natural process of ebb and flow, because when an index gets into a steep uptrend, over the last 4-5 months, we saw the Nifty IT index, I think from 31,000, 32,000, that was a low for the IT index in the month of May, June. And from there, the IT index has moved more than 30-35% above the 40,000 plus mark. So I think after that steep uptrend for the IT index, and many of the large cap names led the move, we are now seeing a cool off happening from the larger cap stocks, and it's money rotation which is coming back again from the IT, pharma, FMCG as an overall basket towards the banking, financials, and the rate sensitives or the high beta pockets like metals as well as real estate. So I would probably believe that it's a churn, it's a shift. Maybe these stocks could correct by another 5%, 7%. But I think from a medium to long term play, there would still be a good opportunity if these stocks correct by a margin of 5% broadly as a good contra buy, or maybe an add-on accumulate further at those levels.
Okay, add and accumulate. Those are the levels that the stock is approaching at the moment. That was about IT. In fact, we did speak with the NASSCOM vice chair today, and he believes that the worst is over for the sector. But nonetheless, the stocks are down in the trading session today. Shifting focus then to real estate. And Naresh, wanted your view. Godrej Properties up 7%. DLF firing all guns. You also have a lot of other stocks like Sobha, etc. doing quite well. What's the take on real estate, and what's the top recommendation?
So the sector looks interesting after the breakout today in a few names. Oberoi Real Estate looks the most interesting one. The stock has continued in an uptrend, but has been relatively slower compared to the other names. Very close to making a new all-time high. So above 1950 could be a fresh breakout move here. So looks positive. That seems the best placed. And the next one is DLF, which has gone through a consolidation of 6 to 8 months and now breaking out into a fresh breakout. The previous highs are around 950, 970. If that's taken out, could get into further momentum. So I'll go with Oberoi and DLF.
What are the BTSC trades then, Naresh?
So looking at names from the bounce back category of PNB, first is PSU banks, which have corrected 20-25% from the top. So expecting a bounce back in PNB, stop loss at 110, target price of 116. Second is about Max Financial, which is making a new all-time high here, good momentum. So expecting this to continue, 1170 as a stop loss, 1220 as a target.
What about your BTST trades?
So I'll go with the ban HDFC Bank as a long trade, targets of 1810 from current levels of 1760 approximately. Stop loss could be kept at 1730. And the second will be ban Escorts. We discussed this on the Chartbusters that the stock is heading towards a breakout, potentially closer to the previous highs of 4450. So that's the target for Escorts. Stop loss could be kept at 4125.
Okay, those are some BTST ideas coming in. In the meantime, also want to check in on some of these infra plays or capital goods themes as well. BHEL, they received another order for an EPC project from NTPC worth about 6,100 crore rupees. There was NBCC, another order from the Ministry of Health for a project in Bihar worth about 1,261 crore rupees. And then JSW Infra, which took a delivery of a dredger to support its expansion plans in Netherlands. So that's another stock which is going to be in focus as well. Mayresh, do you think theme in the market is not perhaps capex anymore, because that was well discovered and ran up as well pretty hard, and now the whole focus has shift to energy transition?
So, Aisha, energy transition will remain a theme. And I think the structural aspects in terms of getting renewable energy to that 500 gigawatt target from almost 180 to 100 will mean serious amount of capex from the government. And therefore, I think solar, wind, and hydro are going to be the key facets in terms of this huge expansion that will happen. Obviously, I think as this expansion happens, you are going to see your EPC players also benefit quite significantly from this entire transition, as well as the power financiers as well. So to that extent, this entire power ecosystem should continue doing well with the kind of demand that is expected to ramp up over the next few years as far as India's context is concerned, in terms of both supplying power and expectations in terms of power reaching every village in our country. A large belief would be how power tariffs will probably play out. And therefore, I think looking at how energy needs will play out, I think this entire power ecosystem can report stable earnings, stable numbers, at least for the next.
The earnings are expected to be steady and stable given the kind of context some of this energy transition theme and the stocks are poised at. But we are shifting focus and talking about the auto sector now, because remember, Hyundai's IPO was much eagerly awaited by the market, because that was going to be one very big one which was coming our way. But it seems like it's got delayed a bit, because earlier the expectation was it might happen pre-Diwali. But as of now, since the IPO hasn't got the clearance, perhaps it might happen only at a later date. In fact, my colleague Sumit is joining us with more details on the timelines of this one. Sumit, tell us what's the latest that you're picking up?
Well, Hyundai's much expected IPO can see some delay, as sources have been telling us that this can miss Diwali deadline. This is because the company has not received market regulators' approval for its DRHP. After that, a few weeks can be taken. After that, a new DRHP will be filed with ROC, Register of Companies. In fact, this one only after approval from SEBI. Well, this is one reason why it can get delayed by certain weeks, but that does means that it will miss the Diwali deadline as far as the IPO is concerned. It is being touted as India's biggest ever IPO. Hyundai is the Korean car makers, which is the second biggest car maker in India as well. Sales have declined also of Hyundai in August. If we talk about last month's sales, it has declined by 12% to 63,175 units last month. Overall, if we talk about, then Hyundai's IPO will be India's largest ever whenever it comes. The DRHP was filed with the regulator on June 14. Public issues comprising of 142.2 million equity shares.
Okay, that's that on Hyundai IPO. Indeed going to be the mega one, perhaps the largest ever, and that's something that we're waiting for. For now, though, it seems that it's going to be a little bit delayed. But Mayuresh, just wanted your sense on how you're, valuing Zomato right now, especially in light of the other peer, that's Swiggy's IPO in the pipeline.
Yeah, there's solid demand in terms of Swiggy's unlisted shares as well, Aisha, at this juncture. And look at the raise that Zepto has done in the recent past as well. I think they've been on a raising spree. And therefore, I think all these players are expected to benefit quite significantly in terms of the transformation that we're seeing, not just in urban India, but also semi-urban India as well. And therefore, I think the entire mechanism in terms of Zomato's key verticals, when it comes to Blinkit, when it probably comes to their hyperpure business and their core food delivery business as well. All three businesses should start firing as per the management on all cylinders as we head into the next few quarters. And therefore, earnings should have a strong fillip as we head over into the next year and the next couple of years as well. So I think two things. One, I think from a price action perspective, a large part of the price move has probably happened as far as Zomato is concerned. The second element, obviously, is expectations in terms of when Blinkit will start coming into profitability. I think the management believes over the next 2 to 3 quarters, and as that happens, I think that transitionary phase will also have the belief that the kind of transactions that are happening onto the platform will only keep on increasing from the trends that we are probably witnessing. So yeah, anybody holding on to a stock like Zomato can continue.
Zomato now very close to that 300 rupee mark, so less than $2 away or $3 away from that all-time high level. I mean, it's still at all-time high, but the 300 rupee mark is something which is just slightly off. And the volatile ride that this stock has seen, I mean, from the listing time to the gains to the big drop, the consolidation, and then this runaway rally, the stock has seen many turns, but for now it's sitting at record high level, very close to that 300 rupees mark. And the market cap has now crossed a good 2.6 lakh crore rupees on Zomato, and with the kind of enthusiasm that we are seeing for the experiential travel and the experiential spend, it does look like the district business of theirs is likely to take off as well, apart from Blinkit, which has done well for them. But shifting focus away from Zomato and talking about some of the other buzzing stocks as well, Concord Biotech continues to reel under pressure, 8% down. Godfrey Phillips is down in the trading session. There's a bit of a reversal on the likes of Voltas, Garden Reach as well. Kunal, anything specific that you are spotting on, let's say, Concord Biotech or even IFL Finance? Because it's had a very choppy ride. Remember that 8% drop, then a big gap up, and now today again consolidating. What would be your recommendation?
So, as a pattern, what we are seeing is that whenever a stock gets into a breakout, or there's a strong price volume up move for the stock, immediately post that for the next 2-3 days, I think almost 80% of the stocks, 85% of the stocks, which we are seeing such kind of a pattern, gets into a corrective wave. Now, that correction lasts for 3 days to 5 days on an average. That's what we've been seeing as a pattern for many of the stocks. And post that is where you see the stock getting back into an uptrend and then breaking past about the previous highs, where you've seen the volume and the price candle moving up higher for these stocks. So my sense is that it's a process where these stocks go into a very strong up move on the back of higher volumes, then a cool off, gradual correction, the indicators cool off, come back towards the mean, and then the prices come back into a more stable uptrend, breaking past about the previous high. So I think this dip should be taken as an opportunity. The only change which you're seeing with many of the other defense names, I think, if I'm not wrong, Cochin Shipyard, etc., that these stocks have now gone into the trade-to-trade series, and I think that could be one of the reasons why you might see these stocks, lying into a consolidative range for a longer period of time, because trading activity drops when you see the stocks moving from moving to the Z category. So I think in that sense, there could be a possibility that you might see these stocks extending that bit of consolidation, but on an average, for stocks like IFL, etc., I would probably believe that this could be a good time where over the next 2-3 days, traders should look at buying the dips.
Okay, that's the take coming in on some of these buzzing names. Just looking at some of the laggards today, and it's Alchem, Nalco, Eicher Motors, there's Divi's as well, which is lower by about 1.6%, and there's Voltas as well, which is languishing in trade as we speak right now. In fact, I also want to check in on Fusion Finance, news-based as the move may be, but there was a credit quality review, and the management has talked about the loan portfolio in the second quarter for the fiscal, and they've revised their ECL provisioning now lower to 500 to about 550 odd crore rupees for the second quarter, wherein the provisioning for the first quarter stood at 348 odd crores thereabouts. So that's one more stock which is in the negative, still a locked in lower circuit, that of about 10% or so. Other than that, of course, we've done pretty okay in today's trading session, managing to close in pretty much around the high point of the day right now. Banks have quite come to the fore in the session, and you have seen even real estate actually made a decent move. So Godrej Properties finally is finishing off with a near about 7% gain. There's been Can Bank, there's been Idea, Indus Tower, Aditya Birla Fashions, MGL, DLF, BOB, these have all seen some very, very decent gains for themselves in trade. On the losing side, like we've been pointing out, and Eicher Motors, Voltas, Syngene, etc. have had a rough patch, however, in today's trading session. But Naresh, before we let you go, just very quickly, wanted a strategy for the Nifty Bank and whether you see continued strength. Will it run for a second day this week?
So the bias remains positive. The trailing stop loss safe very close, should be closer to 53,800 odd levels. So the bias is positive, and we are seeing HDFC Bank come closer to all-time highs. So would continue to hold the long positions.
Okay, Mayuresh, Naresh, Kunal, we'll let you all go on that note. In fact, I'm going to hand it over to Ashesha for the closing trades.
Another day, another record highs for the Indian